Okay, I get it. That was my problem.
You have seen your problem.
Yeah, I did a mistake in the adding.
Okay. Let's therefore get that 554, 684, therefore to be, no, this is not, this is the wrong answer. So yeah, therefore 4162 to be the NPV. They have advised the company should accept the project or should invest in the project, the company should invest in the machine, invest in the machine, because I think this is one machine, in the machine, since the NPV is a positive. Okay, $41, 4162,000. Okay, simple as that. The company should invest in the machine, not just invest, by the way, because most of you try to get a shortcut. Not just invest, but why? Okay, the company should invest in the machine since it's a positive NPV, or this investment has a positive NPV. You can even mention the value, $41,62,000. Clear? Okay, that's great. Any question?
I have a question.
Yes, Brian.
I wanted to request you to repeat the difference between the nominal and real terms because I missed that.
Okay, this is a nominal. This is where we need to effect the inflation on all the variables. Okay, we need to effect the inflation on all the variables. So those variables that may be affected by inflation, we need to effect the inflation there. So for example, selling price, like you're done here. Where was this? For example, here there was the selling price that was subject to 4% inflation. You do that. A variable cost, it is all subject to inflation. You do that. Okay, fixed costs, okay, the same thing. Working capital, the same thing. Okay, as you can see. So all those variables that are subject to inflation, you need to effect the inflation on them. Okay. So all those variables. Okay. Once you've done that, you'll be having what we call the nominal cash flow. So this cash flow you're going to obtain there down here what we call the nominal cash flows, because they are after effecting inflation on the variables above. Okay, so these are nominal cash flows. So all these, they're called nominal cash flows. Then since these are nominal cash flow, you discount them at the nominal rate of return. Okay, and then PV you're going to obtain, therefore, is the nominal NPV. Okay, because of the nominal term approach. Okay. Now, in case you ignore the inflation, in case you did ignore the effect of inflation, therefore all the variables given here, assume that there's no inflation here, there's no inflation here, no inflation here. So if that's the case, therefore, then these therefore will be what we call real cash flows. Okay, the real cash flows. Okay, because there's no inflation so far you have effected on the variables. Okay, they'll be real cash flows. Therefore, in case of real cash flow, you discount them at the real rate of return. Okay. Then once you get the NPV, this will be the real NPV. This NPV, therefore, will be the real NPV. That is in case we had ignored inflation. Clear?
You get the real rate by using Fisher's.
Yes, you get the rate of return using the Fisher's equation. Okay, the 1 plus n, okay, is equal to 1 plus r, okay, 1 plus h. And this is the real rate of return. This is the nominal rate of return. And this is the general rate of inflation.
So the question will always tell you whether they want it in nominal or real terms.
Yes, it will always tell you whether it's nominal or it's the real. Yes, the examiner will always tell you. Yes.
Okay, thank you.
Okay, good. Now, don't forget, this will be a section C type of question. Okay. Unfortunately, I did not want to give that question for Cat 1. Okay. So what I did, I gave section A, then section B, then section A again. Okay. I hope you're able to note of that. Okay. So I didn't want to give section C type of question. Okay, because I think it's a bit faster to do section A and B, both the multiple choice. So it was the system could be able to mark. Okay. So, however, the next question we do, okay, I'll try to see how I can put CNC in the system so that we can be able to also attempt section C type of question. But actually, the main concern, I don't know whether I think I've told you this in the past. Most of the time, where you normally fail is in section A. Okay, as per the past students, okay, they normally fail in section A. That's where most of the students normally fail. I don't know why, but normally fail in section A. Okay. That's why I would like to put more questions from section A type of question. And as going forward, we shall also be doing the RATs, which I think you've already done so far in the past. But I want to put the RATs on the system so that you get the result immediately. Okay. I hope you're able to get your result on the card, and hope you're able to get to know, okay, where you are weak, okay, because in case you didn't get about 70, then that shows that you're still a bit weak. Because don't forget, these are only 3 topics, maybe 4 topics. Okay, so you need to have gotten more marks on that particular area. Yeah, 70, yes, 70%. If you didn't get 70%, then there's something wrong somewhere. You need to check on what you could have done better. Yeah, you ought to have gotten almost like 80 or 90 actually. Anyway, that's just to show you that maybe you should have done better in that particular card. Don't forget the main exam. Yes, Nafisa.
I don't know, is it only me that I couldn't see what questions I got wrong?
Yes, and it was a setting on my end. Right now you can go, if you check right, you'll be able to get your question and as well as the correct answer. Yeah, right now you can go to see it. Yes.
Thank you.
Yeah, and in case there's a question that maybe you found a bit hard, then you put note of it. Then the time for revision, we shall come back to those questions. Okay, so in case any question that you was a bit hard, take note of it. Then the time for revision, we shall come back to those questions, and we attempt that to do them together. Okay. So in section C, don't forget, you'll be doing through, if it's about NPV, it will be through Excel, okay? So let's do a presentation on Excel on how you should present the question if you have to do through Excel, okay? So I want us now, we do a question through the Excel, NPV through the Excel. And you see how easy it is actually. You share. Because most of the workings you've done, I normally say to students, in section C, okay, in the Excel, the one you'll be using, okay, ensure you don't use calculator. Propose that, okay, this is Excel, which is a calculator on its own, okay, so don't use your physical calculator when doing this question, because what will happen is that you forget to put your workings in the calculator in this Excel, so you not get the marks. The answer is there, but the examiner can't see your working. Okay, so I propose as much as possible you avoid doing or having a calculator when doing section when presenting through Excel. Okay, as much as possible. Okay. Anyway, so I want us to do a question. We trace a question, then we see how we should present that question in the Excel. The examiner is going to give you. So let me look for a question. Then you see how you should present it in the Excel. NPV 13. Yeah, I guess we can do this. This is BQK. Okay, BQK company. As per my question mark, it's in page 38. Page 38, BQK company. So go through it, then we attempt to read together. We present this in an Excel. BQK company, page 38. So go through it, then we attempt to do it together. Just to go through the question. So here you meant to get the NPV, okay? Work to the nearest of 1,000, okay? And since each of the variable is subject to its own unique inflation, like selling price is 3%, variable cost 4.5, fixed cost 2%, then we need to use the nominal, okay? Even though the examiner here is not very explicit, but either way, because we have the rates being unique, the specific rate of inflation, then here we need to use, therefore, the nominal rate of return, the nominal term approach method, okay? So let's do it together. Page 38, just a minute. Page 38. BQK, yes. Okay, then present through Excel. Okay, here we go. Okay, so you got the first working, I think it can be is the amount with the revenue. So it can be there to be a first working revenue. Okay. And for this case, we can begin with small house and then large house. So small house, and then call this to be large house. Then here I can have the total, okay, or the sum. So for the small house, okay, can have here 1, So here I can call this year 1, small, large. Okay, let me just put here the reverse here to be small, and then here to be large. Then this to be year 1, year 2, year 3, therefore years, and for year 4. Therefore, in year 1, the revenue we receive from the sale of small house, we've been told that in the small house we sold in year 1, they're 15, therefore 15 units. Okay, we multiply by the selling price. The selling price for the small house is 200,000. 200,000. 1, 2, 3. I always prefer to have my workings in thousands. Okay, so let me put them in thousands. Okay. Okay, in case I make a mistake, I'll get to know that I've made a mistake. So no mistake there. However, this is subject to inflation of how much? 3%, because this is the selling price, the revenue, 3%. Therefore, 1.03, the power of 1. The power of 1. Okay, so I have the formula there, and then therefore now I can drag it across for the entire 4 years. Let me refer back to the formula. There is a formula. Year 1, 15 units for small house. Okay, we multiply by the selling price, which is 200,000. However, it is subject to inflation of 3%, therefore 1.03 to the power of 1. Clear? Daisy, is clear?
Yes, it's clear.
Okay, great. Therefore, the revenue received from the sale of the house, small houses in year 1. I have the formula, I can drag it across for the entire 4 years. So I can drag across for the entire 4 years. Okay, year 1, year 3, year 4. Then I can now make adjustments with my formula. For example, in year 2, the number of units are 20, so I adjust here to 20. Okay, selling price is the same. Okay, and that is it. Year 3, I do the same. I adjust the selling price. The number of units, the number of units is 15. Okay, is okay. Yeah, so there's nothing. Okay. Year 4, I adjust the number of units of sale, 5, from 15 to 5. So I adjust my formula to 5. Clear? Okay, that's for the small house. For the large house, the same thing. Okay, it will be equal to the number of units, which in year 1 there are 7, times the selling price. The selling price for the large house is equal to 350. 1, 2, 3. So 1, 2, 3. Then there's a 3% inflation, 1.03. Okay, to the power of 1. So I refer to my 1 here. Okay, therefore the amount to be received from the disposal, from the sale, okay, of the large house. I have the formula, then I can drag it across for the entire 4 years. Okay, but now I need to adjust because the units are different. Year 2, there are 8 units, so I change from 7 to 8. Year 3, I change from 7 to the number of units for sale is 15. 15. In year 4, the number of units of sale, they are also 15. So I adjust from 7 to 15. To 15. Okay, from 7 to 15. Clear? And here I can have the total, which is equal to sum. Okay, have the sum of the formula there. Sum from the total revenue to be received from the sale houses. Have the formula. I drag across for the entire 4 years. Clear? Okay. Next is to get the variable cost. So you can call this variable cost. Okay. So then I can copy the workings here already. So let me just copy my workings here. Then I adjust manually. So copy. Don't forget you cannot copy directly. Like you cannot right click on the Excel. So it has to be Control C. We know those shortcuts. Okay, Control C, Control V. Okay. So let me use those shortcuts as it is. Okay. So Control C, I can copy. I can paste now. Control V to paste. Okay, but you can't do that in your Excel. You can only use the shortcut Control C, Control V. You can't right click and copy. It's not going to be provided for you. Okay, so let me adjust therefore. So I adjust my formula here. Variable cost. Okay, the variable cost for the small house it's 100. So therefore adjust here to 100. okay, to the power of, okay, to the power of 1, to the power of 1 there, for the variable cost for the small house. Now the formula here, I can drag it across for the entire 4 years. Okay, I can just make adjustment here. Okay, let me just drag it across for the entire 4 years. This will be easier. Okay. Then I adjust the number of units in year 2, they are 20. So I adjust to 20. For year 3, the number of units for small house, they are 15. So that's okay. For year 4, they are 5. So I adjust to 5, from 15 to 5. Okay. For the large house, the same thing. Okay. I need to adjust the number of units. The number of units for this, they are okay. However, the variable cost is now 200. So I adjust from 350 to 200. Okay. The inflation, however, the inflation is different. For the variable cost, the inflation is 4.5%. Then I need to adjust that 4.5%. So adjust 4.5. Year 2, 4.5, same thing. 4.5. Year 3, 4.5 also. Okay, the same applies in year 4 from 3 to 4.5%. For the large house, same thing. Okay, the number of units are 7. Okay, the number of units, the variable cost 200. The inflation is 4.5%. Okay, for year 2, the same thing, and adjust to 200. The variable cost is equal to 4.5. I need to change the reference to the power of 1. Okay, you can do it manually in case you prefer. The power of 1, the power of 2. Okay, and do that to the power of 2 because it's year 2. Year 3, the power of 3. Okay, selling price, no, the variable cost is now 200. So adjust 200. Okay, 4.5 is the inflation. Here 4, same thing, number of units are okay, but this is 200. I adjust 200. Inflation is 4.5. Okay, to the power of 4 because this is year 4. And that for total amount to be received. Okay, from the cost to be incurred on variable cost from year 1 to year 4, both small and large house. Question? Okay, no question. Then next we can do is on fixed cost. Okay, can do here working for fixed cost. Okay, can have year 1, year 2. And by the way, my workings I prefer them to have year 1 here, year 2, year 3, year 4, as opposed to having year 1, year 2. Where is this? Year 1, year 2, year 3, year 4. I don't prefer to have them vertical. I prefer them to have horizontally. Because as I'll show you later on, it's a bit easier to recall your workings to make a cell reference if the workings are horizontal as opposed to being vertical. Okay, so I prefer my workings to be year 1, okay, year 2, year 3, year 4 horizontally, okay, as opposed to year 1, for example, okay, year 2, year 3. I don't like this way because you have to recall each of the cell on its own. Okay, so if you have your workings this way, okay, which is a bit tiresome, you don't want that. Anyway, so year 1, so here fixed cost, year 1, year 2, year 3, year 4, okay, would be equal to the current fixed cost is 1.5, therefore it's 1.5, 1.5, that's okay. Okay, there's an inflation on fixed cost of how much? Or 2% per year. It's 1.02, okay, to the power of 1. I have 1 here already, okay. Now the formula, I can drag it across for the entire 4 years. Okay, yeah, 4 years, I need to, okay, until year 4. Here come the for fixed cost, year 1 all the way to year 4. Anything else you require to do? And that is it regarding the revenue, variable cost, and fixed cost.
So, I have a question on the fixed cost.
Yes, yes.
Why is it a relevant cost over here?
Because here, what are you doing? It is a construction, isn't it?
Yeah.
And you want to construct new roads, gardens, drainage, utilities. Do you incur this cost because of the investment?
Yeah.
Yes, that's why it's therefore it's a relevant cost, because it's like you're doing houses for sale. So of course you need to make roads, isn't it?
Okay, okay. I was thinking about the incremental part. That's why I got
All the
it.
incremental part, okay.
Yeah.
This
Okay.
example is not incremental because it's
Yeah.
it's a new project altogether. So the entire
Okay.
cost is relevant.
Okay, okay.
Yes, but in case it was a machine, you're comparing before and after, then of course there you have to consider the cost of relevance. The incremental fixed cost for sure.
Yeah, yeah, okay.
Yeah, but the entire of 1.5 million is the entire of it is fixed cost. Is therefore incremental because you never used to pay this before.
Yeah, yeah. It's a whole new cost.
Yes, yeah.
Okay.
That's on the fixed cost. Next is on what else do you need? Capital allowances. You get capital allowances you can claim. Can you claim capital allowances for this? Let's see. Yes, the company can. This is second last paragraph. The company can claim capital allowances on purchase on a straight line basis. Okay, straight line basis. Okay, that's an easy one. So, tax depreciation capital allowances. What are we going to call them? And then you call it like this. Capital allowances. They want they will find them with there. Capital allowances per year. Okay, so per annum. For per annum. Okay, it would be equal to the cost of the asset. The cost is equal to the cost of this project is equal to 4 million. Therefore, be 4 million. We do a number of years. 4 million. Yeah, it's a 4 millions. You do it a number of years. Number of years is 4. So divide by 4. Okay. Therefore, the tax saving, okay, would be equal to the tax rate. We multiply by this. Will be 1 million. We obtain above times the tax rate, and the tax rate is how much? Is 20. How much tax rate? 30%. 30%. Therefore, the tax rate per year, therefore, be equal to 300,000. Any other working we need? Okay, seeing these are nominal cash flows, we discount the nominal rate of return, which is 12%. And that is it. Okay, that is it. Therefore, we call this solution. Then be equal to year one. Maybe I'll give year zero, because this is Excel now. I can be able to do that. Year four, the tax are paid in arrears, therefore I need to add year 5, because the tax for year 4 is paid in year 5. Okay, then I can begin with the revenue. I just make a reference to my workings. Okay, revenues, I have them here. Okay, and since I've done my workings horizontally, I cannot drag the formula for, oh no, this is year 0, sorry. So therefore, I'll begin with year 1 equals, revenues are here. Yes, okay, then I can drag my formula from year 1 all the way to year 4, since I've already made my workings horizontally. Okay, either vertical, you can't do that. Okay, I think try on your head. If the workings are vertical, you can't go to drag the formula. You have to pick one cell per cell, which is, I think, okay, not a lot of work, but I don't like that. Okay, that's the revenue. Then you have variable cost. Variable cost year 1, I do the same. Variable cost done here already. So I make reference to myself. Okay, this cash outflow. So I begin my formula with the negative. Let me do that. I begin my formula with the negative. So negative B9. So that's year 1. All the way to year 4. I drag my formula to year 4. Then have fixed cost. We erase the fixed cost also. It be equal to negative fixed cost. We have it here. Year 1. I drag my formula for the entire 4 years. Anything else? No. And I have here cash flow productization. Okay. I call this cash flow before tax or profit, in case you want to call that way. Okay, before tax. It will be equal to simply sum. Okay, sum of my cash flows above there. That's year 1. Okay, I drag my formula until year 4. You pay tax. Okay, and paying tax in arrears. Not tax in arrears, 30% in arrears. Therefore, be equal to minus, because this is cash outflow because you're paying 30%. Okay, times the previous year's profit or cash flow productization. Okay, that's for year 1. You have the formula, drag it across for the entire from year 2 to all the way to year 5. Okay. However, your tax savings, okay, therefore tax savings that you already done, okay, per year it is equal to 300,000. Therefore, be equal to 300,000. This is from year 2. Don't forget, sorry for that. It's from year 2 because it's also in arrears. Equals, therefore, I want to lock myself. So because it's the same for the entire year. Okay. Just a minute. Okay, reference to the cell, then I adjust. Okay, I need to put the dollar sign here because I want to lock that cell. But the same is the same for the entire 4 years. Okay, so now I can drag my formula. Okay, for the entire 4 years. But don't forget, in case you want to do that, you need to lock the cell using the dollar sign. Okay, so tax saving. Okay, I've done that. Working capital, is in working capital here? There's no working capital here. And that is it. Okay, and that is it. Wow. Cash flow. Okay. Before I do the cash flows, I would want to have the initial cost because now, since I did include year 0 in my analysis here, the key I have this year 0. Okay, so it has been picked. So I need to include therefore year 0 here. So initial cost. Initial cost is 4 million, therefore negative 4 million. And this, you see, the reason why I normally prefer to have them in 1,000, I can do tell that, hey, this is 40, it should be 4 million. Then I can go and make an adjustment. Okay, so I prefer when you, if possible, do this. Okay, it becomes a bit easier for you to tell in case you made a mistake. No working capital. Okay, cash flow. Okay, then this should be a sum of cash flows all the way from cash flow transaction, okay, all the way to the initial cost. I have the formula I drag across for the entire 5 years. Okay, and you have the cash flow there. This is Excel, okay, so you don't need to get the present value, you don't need to PVIF, present value, NPV, you don't need that. This Excel is can be able to do for you that. Okay, so I remove all that and I say NPV to be equal to NPV. Don't get this Excel, so you can have the formula with it. Okay, so let me repeat, equals NPV. Okay, then you define the rate. Okay, at what rate do you want to discount the cash flows at? You want to discount the cash flows at a rate of what percent? 12%? Yes, 12%, therefore 0.12. Okay, then you define the cash flows, okay, from year 1 all the way to the last year. Year 1 all the way to the last year. Okay, and that's the value there gives you the present value of cash flows from year 1 all the way to year 5. Okay, then what you do, you minus the initial cost. Okay, in this case I'll plus because it's already a negative. The initial cost is already a negative, therefore plus the negative 4 million. That's give me the NPV of the investment. Clear? Daisy, it's clear?
Yes, sir.
Nafisa, is it clear?
Yes, sir.
Brian, is clear?
Yes, it is.
Okay, great. And now I just press enter. I just press enter and I get my NPV. And there you advise the company. Okay, advise the company, the advise the company you're going to give. The company should invest, should invest the project, should invest in the construction project. Okay, in the construction project. Okay, since the NPV is equal to 274,960 is a positive. Simple as that. There are no penalties for typo. Okay, so in case there's a typo, no penalty for it. So you can but for typo, there's no penalty for typo. Okay. Sorry.
Sir,
Yes.
could we use short forms like if it's variable cost, we just write VNC?
Variable cost VC, you relate VC, fixed cost FC.
Yeah.
Yeah, you can do that. There's no harm. Provided some examiner can be able to tell what you mean by VC, by it's something that you can tell. Yes, possible. You can do that. Selling price,
Okay.
ASP, you can do that for sure.
Okay. Thank you.
Yeah. Okay. And so we're meant to do that in that particular question. Okay. I think it's much easier. Okay, to present the an exam. Okay. The way your examiner has displayed your work in your work. Okay. I think it's much easier for sure.
So could you please send this your
Yeah.
exam?
Yes, I'll do it on our WhatsApp group. I can share this. I'll share this for sure. Okay, fair enough. If there's no question, then we'll be tomorrow then. Any question? Okay, fair enough. Then let's meet tomorrow. Yes.
When do you think we'll be done with this section, investment decisions?
We're almost done. By tomorrow we'll be done. I think
By this whole part, right?
yes, by tomorrow we'll be done. Because what is remaining, it's just how to use IRR to appraise the case. I think by tomorrow we'll be done. By tomorrow we'll be done.
Okay. That's good. Okay, thank you.
So this is BQK company. Okay, so I'll share this on the WhatsApp platform. Okay, fair enough. Then see you tomorrow.